Hey everyone, and welcome. Today we are diving deep into what I think is one of the most important chapters in all of finance. We're talking about Chapter 7 of Benjamin Graham's masterpiece, The Intelligent Investor. We're going to get straight to the heart of what real risk is in the market, and you know what? The answer is probably not what you think. So let's get into it. All right, let's just start with a really direct question. Right off the bat, I want you to take a hard look at your own strategy. Are you really investing, or is what you're doing just speculation dressed up to look smart? It's the core challenge Graham throws down, and it's one we've got to face honestly if we want to succeed. You see, Graham points out this huge problem, this pitfall we can call the speculator's trap. It's this idea that being busy, making lots of trades, using complex software, constantly checking your portfolio, means you're being smart. But more often than not, it's just a cover for good old-fashioned emotional guesswork. And this brings us to the main villain of our story today, sophisticated speculation. And listen, this isn't some outside force like the market itself. Nope, it's an impulse that comes from within us. It's when fear and greed are really the ones making the decisions, but we hide them behind fancy charts and complicated jargon to fool ourselves into thinking we're being rational. Getting this difference is absolutely critical. An investor, a real one, acts like they're buying a piece of a business. They're focused on the actual value. But a speculator, they're basically just betting on which way the ticker is going to move next. The key difference isn't about how smart you are. It all comes down to discipline versus impulse. So be honest. Which column do your actions fall into? Okay, so how do we avoid this trap? Well, the first and maybe the most powerful tool in our arsenal is something that feels wrong in our fast-paced world. It's patience. Graham teaches us that waiting isn't just doing nothing. It's actually a powerful strategic move. And this quote just says it all. The market is not some endless buffet of amazing deals. Truly fantastic investment opportunities are actually pretty rare. So your main job as an investor isn't to be constantly clicking buttons. It's to build the discipline to sit and wait patiently for those few moments that are really going to move the needle. Now, let's be clear. This isn't about being lazy. This is an active, prepared kind of patience. And the playbook is simple but incredibly powerful. First, you do the work. You do the deep research. Second, you wait with discipline until the market offers you a price that gives you a margin of safety. That's your cushion against being wrong. And only then, when those two things are in place, do you act. And you act with a kind of conviction that only comes from real preparation. So patience is one half of the puzzle. The other half is knowing when to put that patience to work. And this has nothing to do with predicting the future with a crystal ball. It's about learning to read the current mood of the market. Because every cycle creates a totally different climate, one of either extreme danger or incredible opportunity. Just think about it. During those roaring bull markets, when everyone is euphoric and prices are going to the moon, that is actually the moment of maximum danger for an intelligent investor. And the flip side? When fear is everywhere, people are panicking and selling everything during a bear market, that is your moment of maximum opportunity. Your mindset has to be the exact opposite of the crowd's. And really, this is the key takeaway. The market conditions, whether they're good or bad, are just the raw materials. They don't decide whether you win or lose. It's your behavior, your reaction to those conditions, that's going to determine the final result, every single time. Which brings us to the final, and I think the most profound lesson from this entire chapter. Once you've analyzed the businesses, once you understand market cycles, there's one last piece to master, and that's behavioral risk. It's time to face your single toughest opponent. So just think about it for a second. What is the biggest single threat to your long-term success as an investor? I can almost guarantee you it's not what you think. It is not a market crash. It is not a recession. The greatest danger to your financial well-being is staring right back at you in the mirror. It's your own emotional response. That gut impulse to sell when everyone's panicking, or to buy into a frenzy of hype, that is the one enemy that can destroy all of your hard work. So what's the bottom line here? It's this. More than your IQ, more than your ability to read a balance sheet, the number one most important skill for an investor is temperament. The ability to control your emotions and think for yourself, especially when everyone else is losing their minds, is the ultimate competitive advantage. It is truly the only thing that separates the long-term winners from everyone else. So we'll end with this question. You can spend weeks, months analyzing a company's financial statements, but I promise you, the most profitable analysis you will ever do is turning that focus inward. Have you analyzed your own biases, your own emotional triggers, your own temperament? Because mastering yourself, that is the real secret to becoming an intelligent investor.